Assalamu alaikum, sir. This is Mohammad Ishaq Haq Tutul, group number one. We are here for the presentation. This is a group presentation, and the presentation is doing one by one continuously. Now we are going to start the presentation. This presentation is presented for Ms. Sagar sir, Assistant Professor, Department of Banking and Insurance, University of Rajshahi. Today our presentation topic is First Republic Bank collapse. In this topic, we cover the five major areas: bank details, timeline of major events, moments of failure, reasons of failures, and what we learned from this failure. Here, this is my student ID. And now, first introduction. First Republic Bank was the San Francisco based bank, which is highly net worth client served. This bank is founded in 1985 and its headquarters was San Francisco, California, USA. According to the report, June 30, 2020, the Republic Bank has 197 billion assets, and the May 1st, 2023, the First Republic Bank out of business. Before that, the bank has 85 branches. This bank is highly valuable bank for this USA because it ranked 18 of the overall condition. So if you see the history of the bank, the Republic Bank was founded in 1985, which was the CEO of Bancroft, and 1985 it was listed in stock exchange, and this stock is Nasdaq, and stock value is $10 per share. And this following this bank journey, it has acquired many asset company, liability based company, and sometimes it was being acquired by the others company. Now the offer and service of this First Republic Bank, the bank offered the commercial and real estate banking, money market, saving accounts, brokerage service, retirement accounts, personal need, mortgage, brokerage, and trustee services. Collapse of the bank. The First Republic Bank collapsed in 1st May 2023. There are a lot of reasons for this bank. The main two reasons is we can say this loan deposit ratio, that is 111%. That means $100 deposit against they pay $111 loan, and it's most of the deposit are non-insurance. And present condition of this bank, the bank is now covered or taken by the JP Morgan Chase Bank, and it is delisted from the stock exchange. Thank you. Now, my next presenter will continue the session. Thank you.
Assalamu alaikum. I am Samia Zaman Pranti, student ID 18120371106. Today I discuss about timeline of major events. Establishment of First Republic Bank. First Republic Bank was founded, marking its entry into the financial sector with a mission to provide high-quality financial service. It was established to provide relationship-based banking service to high-net-worth individuals, business, and families. Service expansion. The bank expanded its services to include wealth management and commercial banking, showcasing a commitment to becoming a comprehensive financial institution. Asset management milestone. First Republic Bank achieved a milestone in asset management, gaining recognition for its success in attracting high net worth clients and managing their portfolio effectively. Corporate social responsibility. Recognition: the bank received acclaim for its commitment to corporate social responsibility and community engagement, contributing to its positive public image. That is my all. Now I invite Moriam Akhtar Mitu.
Thank you, Pranti Samia, for giving me the floor. Here, Moriomitu, student ID 18, 12, 13, 71, and 08. Today, my discussion topic is about timeline of major events. Here, I discuss sign of financial instability, regulatory scrutiny, financial downturn, and regulatory intervention. Sign of financial um, on December 2022, reality kicks down the door. By December, things began to look dark. Some banks were feeling pressure because if there were sudden bank runs with depositors pulling out their funds, they didn't have enough cash to cover the demands. The lack of liquidity could quickly turn into insolvency. On that time, First Republic also faced liquidity problem and moved toward insolvency. Regulatory scrutiny. It occurred in March 2023. Chips start falling. First Republic had something of a specialty in high net worth individuals. In mid-March, the bank announced that it had access to a total of $70 billion in additional funding if necessary. Rather than calm the storm, it increased the wind speeds. It took 11 big banks putting another $30 billion in deposits into the bank to keep danger at bay for a while. Financial downturn. In April 2023, problems come home to Rose the First Republic. By late in April, the problems for First Republic hadn't stopped. The bank was reportedly looking to sell between $50 billion and $100 billion in assets and had reported that deposits were down by 40.8% from the previous quarter or 30.5% year over year. Regulatory intervention. In May 2023, First Republic is gone. In the early hours of Monday, the FDIC finally closed the bank and sold it to JP Morgan. All deposits were bought by JP Morgan, eliminating the need to provide additional coverage. A loss share transactional of single family, residential and commercial loan will share losses and potential recoveries on the loans to maximize recoveries by keeping assets in the private sector. Thank you, everyone. Now I'm requesting Ismat Jahan Ivia to continue our presentation.
Assalamu alaikum, sir. I am Ismat Jahan. My student ID is 1812037114. Today my presentation topic is moment of failure. The critical moment of failure for First Republic Bank was marked by a perfect storm of financial challenges. The bank faced a sudden and service crisis that included a significant spike in non-performing loans, deteriorating asset quality, and a loss of confidence from both investors and regulators. This led to a rapid decline in the bank's overall financial health, making it incapable of meeting its obligation and sustaining its operation. The bank faced challenges in complying with regulatory standards and requirements. The bank's heavy reliance on certain sectors made it particularly vulnerable to economic fluctuation, and the failure to diversify its portfolio left it exposed to systematic risk. Now I would like to invite our next team member, Mohammad Ali Hussain, to continue our presentation.
Thank you, Ismat Jahan Ibia, for giving me the chance to discuss about our presentation. I am continuing the remaining part of our presentation, which is moment of failure. Here, I am discussing some data that provide sign before failure. The bank, the First Republic Bank, the first sign moment was shown in 13 January 2023. The time interest rate expense will be increased almost 153% from the period year. And the second sign of failure, First Republic Bank, is 18 March 2023. It failed to recover from solvency. And another date that we see here in 10 March 2023, financial regulators closely Silicon banks and starting midday move as the bank provide incapable of meeting withdrawal request. Share first aid Republic slide almost 29% between March 8 and March 10. Investor look minimize exposure and closest part. And next sign will be uh, discussed in here. It is 24 April 2023. Following a fairly quiet month for First Republic, share actually rose nearly 25%. The bank delivers a downside delightful earning reports, disclosing its staff rate at a 41% outflow in deposit during the first quarter of 2023, and the final date of the bank the final date of failure, it was 1st May 2023. First Republic Bank is no longer after the Federal Deposit Insurance Corporation announced the closure of the closure of the bank and sell most of its deposit and assets to JP Morgan. Thank you. That's all of my side. Now I would like to invite our next team member, Shora Bhaldar, to remaining our presentation.
Thank you, sir. Myself, Saurav Haldar, and my bearing student ID is 1811037139. Today, here I am going to discuss about what happened to First Republic Bank. And the First Republic Bank is a San Francisco-based regional bank which focused on high net worth client. Basically, it closed on 2023 and was acquired by JP Morgan because the most prominent reason that the bank failure is the most of the large proportion of its deposit exceeded the limit for coverage by the Federal Deposit Insurance Corporation. The Federal Deposit Insurance Corporation covers as up to $250,000 per account holder per account type. But if there is an exceed amount of deposit up to that amount, more than that amount, then this deposit amount will not be covered by the Federal Deposit Insurance Corporation. According to the last information of the December 2022, the 67.4% of the First Republic deposits were uninsured. And according to this information, S&P Global Market Intelligence data analysis. So first, here I am going to discuss about some reasons of failure of First Republic Bank. The most prominent reason of failure of First Republic Bank is uninsured deposits. A high number of uninsured deposits can contribute to a bank run when investors start to panic. First Republic's wealthy customer base had a high proportion of uninsured deposit, with more than 67% of banks' deposit being uninsured as of December 2022. Another reason of failures of First Republic Bank is lack of liquidity. As you know that liquidity is the most valuable things for a bank, but in case of First Republic Bank, the income source was the net interest income come from the loans and investment of securities. Many of its investment were in the real estate loan, municipal securities, and which are less liquid, not earning competitive interest rate. Among mid-sized banks, First Republic Bank is the highest ratio of loans and securities to uninsured deposits in December 2022. Then the another reason of the failures of First Republic Bank is interest rate risk. Like many other banks, First Republic Bank had tied up its reserves and its long-term asset with interest rates were low. The main trouble in 2023 when the federal funds rate shot up into 5% to quell the inflationary pressures because the value of this long-term securities decreased significantly. In the event of First Republic would need emergency capital at that time. That means First Republic need emergency capital, and it would start to force sell all of its securities at a higher sale prices, and that's the reason of another uh, thing of reasons of the failure to First Republic Bank. Uh, that's all from my side. Now I'd like to invite our next presenter, Miroza Islam, to continue our presentation.
Assalamu alaikum. Myself, Miroza Islam, student ID 34. And now I'm continuing the remaining part, the reason of failure of First Republic Bank. So here I discussed the 3 points, that is credit rating downgrades and unexpected withdrawal of the deposit, and last one is the mistrust in the regional bank. So First Republic Bank faced rapidly a credit rating agency degrades due to the cause of lack of liquidity, funding deposit, and this lead to their profitability effect. Again,
It also failure for the reason of unexpected withdrawal of the deposit. It is reported by the First Republic Bank that their withdrawal of the deposit was more than 100 billion, and it was the almost 41% of their total deposit, and thus the loan ratio of the debt ratio was 111%. That means the First Republic has the loan out more money than it's that it, and this was found from their financial report that is published on the first quarter on 2023. And last one is the mistrust in the Reserve Bank. And this is another reason for failure of the First Republic Bank, because this is done Silicon Valley Bank and Signature Bank collapse due to this were along with the credit rating downgrades, and that's why investors are increasingly concerned about the keeping uninsured deposit in the regional bank. So this was some topics which I'm trying to explain here. Now I'll welcome to our next team member, Srimad Bhagavat Tripura, to continue our discussion. Thank you.
Thank you, Miroja Islam. Adab, I am Sriman Bhagavat Tripura. My student ID 1810337147. Today, my discussion topic is lessons learned. The rise and fall of First Republic Bank offer valuable lessons for the banking industry are, first of all, robust risk management. Financial institutions must prioritize robust risk management practices to identify, assess, and mitigate risk effectively. Regular stress testing and scenario analysis can help anticipate potential challenges and prepare the institution for adverse situation. Secondly, regulatory adherence. Strict adherence to regulatory standards is essential. Banks should properties compliance and establish mechanisms to establishing and meet regulatory requirements. Proactive engagement with regulatory authorities can help address concerns before they escalate. Thirdly, diversification strategies. Banks should diversify their portfolios to reduce exposure to specific sectors or types of loans. A well-diversified portfolio can help mitigate risk associated with economic downturns and industry-specific challenges. Fourthly, governance reforms. Strong corporate governance practices are crucial for maintaining the trust of stakeholders. Boards of directors should actively oversee maintain decisions, ensure transparency, and foster a culture of accountability throughout the organization. And finally, continuous monitoring and early detection. Regular monitoring of financial indicators and early detection of warning and signs are essential for preventing a crisis. Financial institutions should establish effective monitoring mechanisms to identify emerging risks and task timely corrective actions. Thank you. That's all from my side.